Hi guys, hi, it's Oyen. So what I'm going to do is probably make 5 short videos so that you're not too bored by looking at all of this as one long video, but you just take your time to sort of go through this SWOT analysis for Rawhide. I've tried to go into some more detail. You've been working your way through the different case studies and general exercises, but now we're just kind of going into Rawhide with a bit more depth and just making sure that you're having a sort of better background understanding of Rawhide. So you need to kind of keep watching this. We have time, we have 2 weeks, so you can keep watching this sort of thing every day just to get it into the back of your head and just naturally have information. I might actually put some questions together to see if you remember the information. So let's quickly go through. So I'll try and break it up into 5 short videos. So I'll probably stop at every 10th slide. Okay, great. So what do we know about Rawhide? What must we remember throughout the case? A couple of things. If you look at the very... so please have Rawhide open, the case study, and this is critical, please. So they start off by telling us that it is a... looking at it here, they tell us that Rawhide PLC. So they tell us it's a public limited company. So what at the end of this slide, I think my last couple of slides, I look at Toys R Us, and Toys R Us is a fair company to use to compare with Rawhide. When I say compare, at least you can argue that Rawhide would like to be like Toys R Us one day because they're in the toy market. Probably one of the closer companies we can think of. So this is a company we need to go and research and have in the back of your mind as well when doing this case study in terms of referencing, right? So the fact that you can even reference Toys R Us will give you points. It's a case study. So it's just about being very aware, having a big picture approach. Right, so we're told it's a public limited company. So what does that mean? So as soon as you're told it's a public limited company, you know it's a listed company. And that means that from a pestle point of view, they're subject to general economic shocks, right? Because if it's a listed company, what does that mean? Well, stock markets in general are a strong indicator of investor appetite, right? So when people say, when people are feeling optimistic, when pension fund holders in particular, which are a big investor in the stock market, or just in general, people's pension funds are deducted from their salaries every month, every week. They have to do something with that money. And so when they're feeling optimistic, because they feel that there will be potential profits to be made, or businesses are doing well and they can sell, they will invest, of course, in these businesses listed on the stock market. So when an idea comes, and they're sure that the companies in that sector will, and generally all the companies in that sector, so for example, if it was in the drug industry, generally once one company is doing well, all the other companies will do well because they can move into that market and take a share of that action. And so generally you can invest in an entire sector, if you like, so invest in that spread of companies. But the reverse is also true. Whenever there is a fear of the unknown, whenever there's a potential recession, when people are watching the cycle, the business cycle, if there are potential trade wars or just in general, adverse variances with that business in general or that sector in general, they want safer products they can invest in. So they go along and invest in bonds, which will give them a pretty much fixed return, if you like, with interest. So the question here is, just going back to our accounting equation, A is equal to C plus L. Most businesses have the option to either invest in a business as C or invest as L. Sorry, my mic is frozen. Oops, sorry, this happens regularly. Either to invest as C or to invest as L. And depending on how risk averse you are, you would go with either C or L. Again, depending on what the general pestle environment is. Great. Now, Rawhide in particular listed on the stock exchange in 20XO, and so they will have access to equity finance. So we know that as a result of them listing on the stock market, they can have access to C and, of course, L as well. And of course, here are a couple of things, just general information. Being on the stock exchange means they must also follow the rules and the regulations and are subject to fines if they do not file their accounts on time. And there's something else also called the Securities Exchange Commission. That's something else. They set guidelines for companies that are listed on the stock exchange, and they have to follow those. So it's important that they have it's imperative they have to have a board structure with qualified personnel. So they will have a finance director, marketing director, HR, sales, purchasing. And they must also have non-executive directors for balance and fairness. And they must also have an internal audit department, and they must also, of course, be audited by independent auditors. So these are some of the structures we expect to see in Rawhide. So let's look at some of the strengths. Now, they tell us clearly that Rawhide own their design and development process, if you like, and this is a strength, a really powerful strength. They have control over their final product and can deal better with external economic shocks, if you like, because at least, if you like, generally many businesses will have to go out there. So think of businesses that have to buy their raw materials abroad or are dependent on a supply chain further down the line for their raw materials. So suddenly, or half-finished goods or even finished goods, imagine suddenly, if you like, the exchange rates don't move against them, then now you have to kind of start you have to be dependent on your supplier of this raw material, if you like, as opposed to when you actually control the very beginning of the process. So here we are, and well, of course, this threat, and we'll see this when we look at Toys R Us, which is why it's really, really important to think about this and to watch all the videos, right? So of course, the threat becomes one of the threats, of course, is the ability for other companies to be able to take your product and copy the design. So we expect Rawhide to have certain safeguards like patents and innovating quickly enough to ensure they are ahead of the curve. So it's really important because we're going to come back to this question of innovation. Hopefully, if you've been reading this case study, you remember there are some issues with their employees, right? That they're cutting staff. So really important to go back to remember what's going on here. So what do we have here? We have Judith, an MD. She joined halfway through 2005. Some of the strengths here is that we're told that she's knowledgeable. She has experience of working in both PLCs and private companies. And she also has a strong track record. And all the other companies I've worked with in different are quite good and are known to be very strong in their different sectors. So that's good. So we have experience. Experience is a kind of, this might come on my next slide. Experience is a, if you like, is a key strength here. And they also have 3 well-known brands. So Bonanza, Toy Cars, and Pro. So internally, this business has the human resource to navigate and deal with the challenge of turning this business around and ensuring it makes profits for its shareholders. So the board is also experienced, and I've written here you should always look for a way to highlight that this is a strength when looking at controls in the question. Right. So when you see any control questions, we're always looking to the fact that the board is a strength, if you like. That's a strength. The fact that all this experience that we have definitely 100% are strengths. And again, I've talked about the fact they also have brands that are recognized and well known, so they should have a presence in the market and should have some recognizable market share and should be able to use their size to direct the market to some extent. And well, we have a couple of issues here. Judith has joined halfway through the year, so we must be aware that Judith needs to get up to speed in time to solve a problem, and we don't know quite yet what the problem is, but that's kind of the issue here.